Hi there. Let's put the spotlight on quarter one earnings and let's take a look at what PVR Inox's quarter one has shaped up to be like. And it's been a good quarter, if I must say so myself, because if you take a look at the revenue, it's coming at 1,469 crore rupees in line with our estimates. The net loss is something that really stands out this time about because it has reduced quite significantly. We were expecting the net loss to come around 55 crore rupees, but in fact it has gone even lower and come in at 54 crore rupees compared to almost 179 crores this time last year. So sharp downtick is what we've seen in net loss, which is looking very healthy for this company. EBITDA too is coming at 397 crore rupees, which is up 58% on a year-on-year basis. Once again, a beat versus our estimates, so looking very good on this front itself. And also, if you take a look at some other highlights, the ticket prices have gone up, highest ever F&B spends and ad income have also been registered. So looking good right now. And let's interact with the management. We have Mr. Sanjeev Kumar Bijli, Executive Director of PVR Inox, joining us on the show, along with Mr. Saurabh Pant, VP Finance at PVR Inox. Good afternoon, gentlemen, and thanks so much for your time. Let's start with you, Mr. Sanjeev, and give us a sense of what worked this quarter, because this quarter has been a very good one for you. Give us a sense of all the tailwinds you've seen and if this momentum is here to sustain. Also, on the profitability front, if you could help with a timeline where you're eyeing break even.
I think for us, in our business, of course, content pipeline is very critical. The content this quarter in April, May, and June was very strong. There were some big films like Raid 2, Kesari, and also Sitare Zameen Par, Bhool Chuk Maaf in Hindi. A lot of regional films also did very well. And of course, I think one of the biggest drivers this time was a Hollywood films, which is Mission Impossible, Jurassic World, F1. So all these films rallied at the box office and they resonated with the consumers, which led to higher admissions. We did 34 million people that came to our cinemas in this quarter. And I think in addition to that, we've been also very, very conscious of the costs. The overall focus on reducing costs so we can actually deliver better margins has really been driven throughout the company. The overall costs have reduced on all line items by almost 30 to 40%. And that remains to be a focus for us going forward as well.
Saurabh, hi. Like Mr. Bijli said, great quarter, great box office collections. But tell me, what about the break-even? Because I'm sure you've got your eye on the numbers too.
Absolutely. So if you look at our investor deck, we actually give a breakup of how India's adjusted EBITDA looks like, right? And while reported EBITDA is at 300 and approximately 400 odd crores, India's 116 adjusted EBITDA was 114 crores. And typically, management tracks India's 116 adjusted EBITDA, so I'll talk on those lines. So our interest cost typically is at about 45 crores per quarter, and depreciation is at about 110 to 115 odd crores. So for us to break even at the PBT level, we need at least 160 odd crores of EBITDA. This quarter, we delivered about 114 odd crores of EBITDA. But looking at the momentum, the content slate, the manner in which Q2 has really taken off, with July delivering highest admissions in the past 18 odd months, and obviously the content pipeline up ahead, I think in the quarters to come, you will see that we'll break even at the PBT level.
Hear that. And Mr. Bijli, I guess all the F&B revenues and ad income also must have contributed to that. But tell me, is it going to be the same momentum for the next quarter too?
Yes, we believe so. I think July for us also has been, if I can say, a phenomenal month already, because we had two sleeper hits, Sayara, which everybody knows about and is talking about, and has broken all box office records, and it's still playing at the cinemas and still bringing people in. And also a regional film that came out just about last week, also doing very well. So I think what is heartening to see in our business now, which was there pre-COVID, is the sleeper hits. And so smaller movies that we don't sort of account for large admissions are suddenly becoming very big. And that's what we're seeing is driving admissions, driving average ticket price, and also advertising and F&B sales. We're putting in a lot of efforts in bringing people back to our cinemas, not only on the basis of strong content lineup, but also on the basis of various promotions that we are doing. The 99 rupee Tuesday has been a very successful experiment, and we will continue to have that every week now. And on an average, we are attracting about 4.5 to 5 lakh people at our cinemas because of that. And a lot of F&B promotions also have driven people back to the cinemas and increased the consumption on F.
Take that point forward on F&B with you, Saurabh. In terms of the total contribution of F&B and ad income to the total revenue pie, what is that mix looking like right now, and what could the mix look like for the quarters to come?
Well, see, I can give you a broad breakup, right? And it's I think it's fair if we do this on an analyzed basis rather than on a quarterly basis. On an analyzed basis, typically F&B revenues would contribute to about 31 to 32 odd% to our overall revenue pie. Ad income would contribute typically about 7 to 8 odd%. But obviously, given the growth in SPH and obviously the highest Q1 ad income that we did in the quarter gone by, and looking again at the content lineup ahead, this can change, but largely that's the ballpark in which these two line items contribute to the overall revenues.
Interesting. But Mr. Bijli, with rising ticket prices, premium offerings, tell me, what about consumer elasticity? Yes, the previous quarter has been a great one, but do you sense these kind of footfalls are here to stay? What's the content pipeline like?
No, the content pipeline, as I said, is very strong. At least we have a visibility till the end of December. As I said, July has started, or rather ended now, on a very, very positive note. The admissions are very high. August looks very good with Kuli and War 2 coming out. Then we have Kantara, we have Avatar, we have the Spy Universe film coming out, Alpha, in December. So typically, Diwali time, we have Thama. So typically, we do have these large ticket films that come out during Diwali and Christmas. And that's a season that we're going into. So on paper, all these films look very, very promising. So we're not bothered about the content lineup. It seems very strong. And even pricing, as I said, 250, 248 rupees average ticket price, plus a lot of the promotions like the Tuesday 99 rupees offers are, I feel, making the product a lot more relatable and accessible for a lot many more people, and therefore we're seeing higher admissions.
Right, and Mr. Bijli, what comes next for you in terms of your expansion of screens, of theatres? Are you going to be looking to expand more in tier 2 to 3 cities, or is that restricted to tier 1 metros for now?
No, we've always looked at a growth a plan which covers all cities across India. So, of course, I think India is still very underscreened. We do find gaps in metros as well. So we are still opening up more complexes in Mumbai, Kolkata, Chennai, Hyderabad, even in Delhi. So because we have some great malls and great opportunities coming up. But our growth strategy is not just one focus. We also feel that we also know through our research that tier 2, tier 3 cities also there is a gap. And therefore we're opening in places like Siliguri, in Leh, in Raipur, and a lot many more places across the country. So wherever we feel there is a gap as far as retail infrastructure and cinemas are, we have deals there in place already. And we'll be opening about 90 to 100 screens more in the remaining part of the financial year.
Right. But Sanjeev, what about premium formats? IMAX, 4DX, recliner seats, gold class, etc. How are they contributing to your revenues? And is there now growing adoption and acceptability of these formats?
No, yes, absolutely. I think IMAX has been a trump card, that has surprised us all, especially in the months of June and July, because most of the Hollywood films like F1, Superman, Fantastic Four have come on IMAX, and all these movies in purely English language have done about 100 crores GBOC, which is a great number for an English film. So IMAX has performed very well in all the metros. I would say IMAX is still a very metro driven format. The other formats such as Lux and Insignia also will continue to grow. And these are also mostly being concentrated in metros, but we recently opened up an Insignia in Guwahati as well. And that's also showing great numbers because I think in every tier two city also, there's always a population that wants to enjoy a higher experience and a better experience. So our strategy really is to look at all formats because the whole course is to be able to provide cinemas to all kind of demographics and all kinds of people at various price points because not one glove doesn't fit all, and there are people who want different kinds of experiences all over the country.
Well, I must say, Mr. Bijli, seems like you're the only one with a trump card right now.
I regretted the moment I said that, yeah, but...
No, don't regret it. You're exclusive. But Saurabh, in light of this, expansion that Mr. Bijli just talked about, what's your capex outlay then? What are you thinking of? Do you have a number in mind? And how soon might these incremental screens contribute meaningfully to your top line?
Absolutely. So these screens will open. So we've already opened about 24 odd screens till date, 20 screens in Q1 and about 4 screens in July. And we'll open another about 70 odd screens during the rest of the year, taking the total up to 200 odd screens. And I'm sure your viewers are already aware that we are focusing on a capital light model wherein the expansion will now be targeted towards opening more FOCO properties and more asset-light properties where we partner with the developers and they shoulder a part of the capex. And in light of that, the overall capex would largely be for the year should be in the range of about 400 to 450 odd crores. Obviously, these numbers can change basis the outlook as we move along. But that's the number that we have currently budgeted for the entire year.
Okay, so sounding optimistic in terms of the capex and expansion going ahead. And Mr. Bijli and Saurabh, we look forward to interacting with you next quarter as well and hope that the numbers are even better than what we've seen. So wishing you good luck ahead and thanks so much for your time.